Welcome back, everybody. Good to be here. Good to hear you. Good to see you. Ed Ponsi here. Your guest here. You are my guest. I'm your guest, whatever the case may be. Here on behalf of FX Street. Great to be here. And another wonderful day. It's Tuesday. We're getting late into February now. And let's get started, right? Some interesting news to kick off your day here. This just came across the news wire, so I thought I'd share it with you. Looks like FXCM is changing its name. FXCM, right? And I'll pull up the stock symbol for you. FXCM. Here it is. FXCM has changed its name. There you can see the big drop in the stock when FXCM announced that it was leaving the United States. It is now changing its name to Global Brokerage Incorporated. Global Brokerage Incorporated. It is going to change its stock symbol to GLBR. And this is a way that companies do like to try to, bury the past, so to speak. Drew Niv, the CEO, is going to step down. He is resigning. He's been the CEO of the company since the company began in the late 1990s. Brendan Callen is the new CEO. Brendan is someone who I knew a long time ago, and he ran the European operations for a long time. He's the new CEO of FXCM, and the new company is named Global Brokerage. So they are basically, when you do a search for FXCM in the future, it's not going to come up. Because they're going to be a different company name and a different stock symbol. And because, frankly, it's embarrassing, and it's over. The company's still going to exist. It'll be called Global Brokerage. And what did they do, actually? A straight-through processing broker is rare in this business. Most of the brokers are on the other side of your trade. And that doesn't mean that they're out to get you. That simply means that it's an over-the-counter market. That, if you're long the euro, they're on the other side of the trade. It's not necessarily a conflict of interest. They have clients who go long the euro, and they have clients who go short the euro. It's not like everybody's going long the euro or everybody's going short the euro. But FXCM posed as a straight-through processing broker. They said, we are simply going to charge a commission and pass the trades through to a market maker. Well, FXCM was also the market maker in disguise. Someone from the company had opened up a market maker. The market maker was not called FXCM. It had a different name, but in effect, FXCM was a straight-through processing broker, but it was passing the trades through to a market maker, which was basically FXCM in disguise. Very clever. Definitely not legal. And so FXCM will be no more. They will be GLBR, will be the stock symbol. And Global Brokerage Incorporated. What a generic name, huh? Global Brokerage. So the once mighty FXCM will be no more. They'll still be there, just under a different name. It's like when that guy Jeff Gillooly. Do you remember Nancy Kerrigan? Nancy Kerrigan was a skater. in the Olympics, and there was another skater, Tanya Harding, conspired to win the gold medal by attacking Nancy Kerrigan. Her and her husband conspired to do this. And they went and attacked her with a metal pipe. They whacked her knee with a metal pipe. And of course they got caught. And Jeff Gillooly changed his name to Jeff Smith because he knew that he couldn't be Jeff Gillooly anymore, because anywhere he went, people would point and say, that's Jeff Gillooly. So he changed his name to Jeff Smith. Well, that's basically what FXEM just did. They just changed their name to Jeff Smith. Anyway, let's move on. That's a sad, sad state of affairs. Let's move on. I have a setup here from yesterday. Aussie yen. And we were doing the FXEd setup, and I want to move along with this. Our client account's still valid. Yeah, the client accounts have been sold to Gain. And Gain is GCAP, GCAP. If you can pull up the stock symbol, you can see GCAP's actually doing quite well. And the stock gapped up when FXCM announced that they were leaving the U.S. GCAP gapped up because they're getting the accounts very cheap. FXCM had to get rid of these accounts. So the accounts are going to GCAP. Of course, if you're an FXCM client in the U.S., you don't have to go to Gain. You can go to Oanda. You can go to a different broker. Of course, there aren't that many choices in the U.S. If you're an FXCM client overseas, you can just stay with FXCM, or of course global brokers as they're now be called. FXCM is only leaving the U.S. They're not leaving any other country. Right? I love the FXCM platform. Carlos says we're losing the FXCM platform. If you really like the platform, if you have dual citizenship, right, then you have the option. Like if you're an American, and if you have U.S. and, let's say, Brazilian citizenship, there's no law against a Brazilian opening an account at FXCM UK. But if you're just an American citizen like me, you're stuck. You can't have an account outside of the U.S. So you must open, or somebody else within the U.S. Who does Forex. And there really are very few choices at this point, because they drove all the bad apples out of business in the U.S., but they drove away all the good ones too, because the regulations are so tough here. We can keep the demo, says Carlos. Yes, that's always good news. The one good thing about trading is that trading is trading no matter which platform you use. And if you're an American and you're trying to decide which platform to use, just open up a demo. Open up a demo of Gain. Open up a demo of Oanda. Open up a demo of every Forex broker you can get your hands on that operates in the U.S. and decide that way. Right? That's one way to figure it out. Who has the best charts? Who has the best platform? Who has the best customer service? Right? Click on that little button in the upper corner and see how fast they answer, and see how well they answer your questions. Okay. All right. Good stuff. Let's get to the trading. Aussie yen yesterday. Now, the way I use this strategy, if you were with us yesterday, we did the entry on the red candle here. And on the red candle, the moving average is 86.43. I don't know if you can see on the screen. If you look at there's a little box, a little white box. And at the very bottom, it says AVGEXP, that's average exponential. 86.437, that's 86.43, that's the That's the moving average. The moving average is also the entry point for the trade. Now, you always go to the most recently closed candle. Now, this candle right here is not closed. That's today's candle. That closes at 5 p.m. Eastern Time, U.S. It's currently 8 a.m. Eastern Time, U.S., so 8 hours and 45 minutes from now, this candle will close. But this is the most recently closed candle. And the moving average has changed. The moving average was 86.43. Now the moving average is 86.48. So we operate this the same way. Right? The moving average is 5 pips higher. So I'm going to add ATR to the chart. Average true range. The average true range is 77 pips per day. This is telling me that Aussie yen moves 77 pips per day. What's half of 77 pips per day? We're going to round up, but you tell me, what's half of 77? Carlos says 38. I think 38 gives you 76. I'm going to round up and go 39. So really it's 38 and a half, right? I'm just doing this in my head right now. I have like a migraine headache, so excuse me. It's 38 and a half, right? Half of 77. So can I round that up to 39? Okay, 38.5. So you take that ATR, the average, the moving average is 86.48. I'm flashing it again. It's in blue at the bottom of that box. 86.48 minus 39 pips. 86.48 minus 39 pips. What's my new stop? $86.48 minus 39 pips. What's my new stop? It's going to be higher than 86.03. Just go 48 minus 39. 48 minus 39 will give you the answer. 86.09. Okay, let me run through that again because nobody even tried to answer that. So I'm going to run through that again. Yeah, 86.09. Henley's correct. I'm going to run through that again so that we all understand. The stop should go up to 86.09 from 86.03. But I want to make sure that we all understand why. See, yesterday the moving average was 86.43. And yesterday the ATR was 80. Half of 80 was 40. So 43 minus 40 was 03. 86.03. Today's moving average is 86.48. course, we're already in the trade, so I'm not going to make that green. We're already in. Right? But I should say yesterday's moving average was 86.48. The ATR is 77. Half of that is 38.5. Round it up to 39. 48 minus 39 means the new stop is 86.09. So, what if I had done that equation and it had told me to lower the stop, I simply would have left the stop at 86.03, because when we're long, we never lower the stop. Now, play along with me. Let's pretend that this candle is closed. We know it's not closed, but let's pretend that it is. The moving average is currently 86.539. 539 is basically 5.4, 53 and 9/10. So the moving average right now, 86.54. The ATR is 77. Half of 77 is 38.5. Round that up to 39. If this candle is closed, the stop would be 86.54, really 54 minus 39. What would the stop be right now if this candle was closed? Let me see if I can get the music playing here. Ooh, 86.15. Henley gets it correct. It would be 86.15 if that candle was closed. But it's not. But that's the idea. That's how we do this, right? The idea is there's no target, but our desire is to just keep raising the stop, and eventually the stop will be above the entry point, but the stop will never be above the moving average. We hope that the price just keeps trucking higher. Now when we come back on Thursday, this candle will be closed. In fact, another candle after it will be closed. So I'm gonna erase that 15 because that's candle still open. So as of right now, the stop is 86.09. If this thing comes down to 86.10, we're still alive. Right? Before it closes. Once it closes, then we can move that stop. And that's the whole idea. Hopefully we can keep raising it until it turns positive. What about the trade itself? Right now, we're at 87.04. We're up 60 pips on this trade. If you want to close half, you can close half. But you have to buy it back if it comes back down to the moving average. Buy that half back. If you close half now, you're making 1.5% profit. You risk 2% on the trade. If you close now, you're making 1.5% profit, but you're still halfway in the trade. We were higher earlier. We got up as high as 87.21. That means you were up 78 pips on the trade. That means you were up about 4% on this trade if you closed at the high. If you closed half of the trade at the high, you made 2% and you're still halfway in with a worst case loss of 2%. Getting all the way out. Hope that makes sense. All right. So it's kind of an in-depth look at it. But I hope that really reinforces the understanding aspect of it. Let's take a look at New Zealand dollar. If there's no questions on that, I'm going to jump over to New Zealand because as we speak, the global dairy auction is ongoing. I'm going to pull up the 5-minute here. Looks like it just made jumping around a little bit here. I'm not sure if we got a result yet. Let's take a peek at our calendar. We'll go to Google. GDT auction. Looks like they do not have the result in yet. I wonder. Let's take a look at the daily first and back it in. It's an interesting chart on the daily. I wonder if we have a major Fibonacci in the vicinity. So it went through the 38.2 fairly easily. We talked about this 50% retracement a little bit earlier. That's kind of close by. May test 70 says Carlos. Yeah, I wouldn't doubt it. Although I wonder if I could get a bounce off of the 61.8, like a quick bounce on a global dairy trade move. I'm trying to fade a overreaction to the. I'm thinking about fading an overreaction to the dairy move. And you're right, it could certainly test 70. You see a lot of activity right here, just above 70. But I'm thinking about something shorter term. Let's go to a 60-minute. I just wanted to get the big picture first in my head. See if there was anything that really stuck out. In this time frame, tell you this area around here really jumps out at me. Just a lot of resistance up here. I'm thinking I could set up a sell here. But where to buy is a tougher question. I kind of like Carlos's idea of 70, but I like it a little bit higher maybe. Like, do you see this? Resist, 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 resist. Could become support. Resistance, resistance. You see all these little attempts to break. I'm seeing 70-40. Let me try to zoom that area a little bit so everybody can get a peek. You see what I'm talking about here? It looks like a lot of attempts to make it through. There's even more here than I saw earlier. Right around 70-40, 70-42. Just a lot of failed attempts to make it through. And then it finally breaks. I got to believe that's going to be some kind of a support area because of so many failures to break through. So let me set this up as a buy. I'm going to buy 70.42. I'm going to sell 71.90. I'm going to fade whichever direction this thing goes. I will not tolerate a large loss. And I'm going to calculate whatever loss I'm willing to take during the break. And what I'm going to do is I'm going to prepare this during the break and maybe some other setups, but we've got the global dairy trade. This is specifically for the global dairy trade. If it doesn't trigger during the global dairy trade, it's a cancel. This is OCO, one cancels the other. And if neither order triggers immediately, like say within 5 minutes after the global dairy trade auction results are announced, then both orders are canceled. This isn't the kind of thing you want to just leave hanging around. Okay? All right. Can we look at Aussie New Zealand during the next session? Absolutely yes, Carlos. We'll definitely do that early in the next session. All right, everybody. Good stuff. This session just flew by, and it flew by because of your participation. Thank you so much. Let's come back in a half hour, and we'll do it again. Until then, this is Ed Ponsi, your FX educator, saying thank you so much. Thank you, FX Street, for making this all possible. We'll talk to you again in a half hour. Everybody take care.